Hello everyone, welcome to my YouTube channel, or welcome back to my YouTube channel if you have been a consistent viewer. So today I'm going to be talking about how to get a trading edge so fast it feels like cheating. So just in case you don't know the meaning of edge, so this is a very simple definition. In trading, an edge is any repeatable factor, condition, or advantage that increases the probability of making profit over a large series of trades. It doesn't guarantee that every trade will win. Rather, it gives you a statistical or structural advantage that, when applied consistently with proper risk management, leads to. So in a short form, when we talk about trading edge, is an approach that makes you money over time. After taking lots of trades over a long period of time, you end up making more than you lose. That is an edge. So I'm going to break it down. Some people think a strategy and edge mean the same thing, meaning if you have a strategy, a working strategy is an edge. No, they are different. When they talk about strategy, it's a bit more surface level. An edge means more precise. Now, this is how I was able to distinguish it. Now, strategy is a combination of technical analysis ideas to create a step-by-step routine that tells you when to buy or sell. So, of course, many people have strategies, right? But let's look at the edge. Now, the difference is that a strategy, if used in its original form, can produce profit long term despite the roller coaster of wins and losses, which I explained. So it means a lot of people have strategies, they know when to buy, when to sell, but they are not making money over the long period of time. And even if you try to test that strategy in its original form, it's really chaotic and it's not profitable. So this video is going to explain, for those people that do not have any strategy at all, I'm going to teach you how to form your own strategy and instantly make it an edge, meaning make it profitable in the markets. And for those that already have strategy, but they are just in a net loss, I'm also going to tell you how to upgrade your strategy and bring out the edge in it. Very simple. So stay to the end of this video. So for you guys starting out that do not have a strategy at all or don't even trust what you're using, how do you create a strategy with an edge? Now, I prepared this mind map right here to show you how to do it, and I'm going to explain. Stick with me. So the first thing, if you're going to create a strategy that has an edge, you need to first understand that there is no right or wrong way to trade. Now, for many years, I was stuck in this belief that I don't want to trade wrongly. I want to trade like ICT. I want to trade like that person. I felt there was a wrong way to trade. So I was rather watch videos and try how they do it. And I always feel maybe I'm doing it wrong. I'm not doing it like ICT. See, so it's important to understand that the markets are unpredictable and the system only protects you from yourself. So when I mean there is no right or wrong way to trade, is that the markets are neutral, right? If you trade break and retest, of course, you see a lot of times when break and retest does not work. Meaning price retest to a particular level and then just keep going down. But from other times, it works. So what does that tell you? Anybody online telling you break and test is the holy grail is a lie, because it fails sometimes. What about silver bullets? Let's talk about the ICT stuff. The silver bullets, the unicorn, the 2022 model. There are many times it doesn't work. Does it mean 2022 model does not work? That's not the truth. It works, but not every single time. So because of this uncertainties in the markets, it means there is no right or wrong way to trade. Now you've understood there's no right or wrong way to trade, you're going to choose what concept do you want to base in. Now, do you want to base in ICT or support and resistance or supply and demand? So the ICT people deal with fair value gap and liquidity and IFVG, market profile and all that stuff. The support and resistance guys keep it simple: market structure and support and resistance levels. The supply and demand guys, they call themselves SMC actually, but it's just an imitation of ICT, because ICT himself is the owner of smart money concepts, right? So these other guys that do supply and demand and call it SMC, well, they stole some concept from ICT, like the order blocks and imbalance they use with inducement theory, blah blah blah. But just understand that it's supply and demand because you're trying to sell at extreme points in a supply zone and extreme points in the demand area. That's what they try to do. Buy at extreme points in the demand area. That's what they try to do. So these are concepts, not strategies. Meaning, if you go deep into each of these concepts, there are a lot of ideas, a school of ideas, like a lot. Now it's for you to do the next step, which is bring few ideas together. Now you have to know criteria for direction and criteria for entry. Now in ICT, some ICT traders, because ICT has taught a lot, so some ICT traders do not even use higher time frames. Their highest time frame is 15 minutes to actually establish directions. So their directional bias is based on liquidity points. So they want to ask yourself, what liquidity have we taken and what liquidity are we going to? And so for the guys that use daily bias, they try to predict the next candle that's going on, the next daily candle that is going to form, and they do that in reference to where is the fair value gap and also where is the next liquidity point or where is the next PDRE, right? Now that is their criteria for direction. Now for traders that do support and resistance, their criteria for direction is usually market structure on a higher time frame, or maybe on the daily, on the 4 hours, like actual market structure. The same thing with supply and demand, guys. Now there are so many other trading concepts, but these ones are like the most popular. When your strategy has a criteria for direction, that makes you know, okay, price is going here. Some people call this narrative. What's the narrative? What makes you want to apply your setup? Because your setup, which is maybe your lower time frame entry confirmation, is just an entry confirmation, right? A criteria for understanding where price is headed to, the narrative, is very important. So your strategy must be like into two arms. Is price going to be bullish today? Is it going to be bearish today? Now, when you've confirmed that it's going to be bullish today based on your higher time frame, then you can now proceed to trade towards that direction with your lower time frame setup. Okay. So personally, I trade ICT, and for some reason, I always prefer market structure when it comes to direction. So I really do not do all the candle to candle prediction. I do higher lows, market structure on a 4-hour time frame. And what I do is, after I've figured out where price is going to on the 4-hour time frame, which if you watch this video, you're going to see how I read my structure and get my daily bias, right? When I've been able to figure out where price is going to for that day, then I can apply my entry model, which is on the 1-hour chart with the 5 minutes confirmation. Now your strategy should also be like that. Now what's the next step? If you have been able to bring the ideas you have from all the things ICT says or all the things you've seen on YouTube, you take some ideas from that concept, from ideas from this concept, scantily fit them together to have criteria for direction and criteria for entry, then you're good to go to the next step. You need a consistent approach. So when bringing ideas together, there are so many things that can make your strategy go out of place, because it doesn't have to be only direction and entry. Things like the pairs you trade. How many pairs are you going to trade? Now, if you're a scalper, you should be looking at 1 to 2 pairs max, because you're going to be holding trade for minutes, meaning your opportunities will almost always be there. So you need to have a lot of restriction from the markets. If you don't have this restriction, you're going to expose yourself to too much risk. So you should have the same kind of pairs you look at over and over again. If you're a day trader, you want to look at max 4 pairs. Me, I'm a day trader and I look at 2 pairs because I want to limit myself as much as possible. So you want to look at the same pairs every day, the same time daily. You want to come back to the charts every day at the same time interval. Now this is going to help you even avoid more randomness and avoid too much trading, because if it's not time yet, you don't trade like me. I trade from 7 a.m. Eastern time till 11 a.m. Eastern time, which is equivalent to 12 p.m. Nigerian time to 4 p.m. Nigerian time. Now, you should also have one entry style. I know a lot of traders are like, oh, if I see this, I'm going to get it. Now, if I also see this, I'm going to get it. Now, if I see that, I'm going to get it. Now, the problem with this is that it was crafted because you were addicted to placing trades. You always wanted to catch every move, right? The consequences of this is one entry style might show up and then you take it, and your other entry style, based on how you arranged the confirmations, contradicts this other entry style. So this one shows up, then this other one shows up while you're seeing this other trade. Do you see that? It's like luring you to enter too many trades at a time or make you feel like you're missing out. It just gives you negative consequences. So you should have one entry style so that if it's there, it's there. If it's not there, it's not there. You should create that space to always walk away from the markets and wait for you to do what you want to see. because it does a lot of things every single time. The next is one time frame assigned for one duty. So I told you I trade a 4 hour, 1 hour, 5 minute. Now there is special duty for each time frame. There is nothing like on the 4 hour, if I don't see what is clear, then I drop to the 1 hour. If I don't see what is clear, then I drop to 15 minutes. This is wrong. Why is it wrong? Because you are giving the whole work to your psychology to do. And psychology is very difficult to manage. Meaning, on a very good day when you're feeling very happy and focused, you're going to you're going to easily, know what is clear and what is not clear. Now, on a day where you are angry, feeling frustrated, feeling down, trust me, your judgment is going to differ. So what happens is, even when you backtest your strategy, you can get a particular result. Let's say you get 10% at the end of this month you backtested. And if you backtest that same month, another time, when you're in a different mood, you're going to get 5%. You're putting a lot of these things on your psychology. You can do that later. But as a beginner or somebody starting out or somebody still struggling, don't. When you have one time frame assigned that I have to see this, now that rule has to stick with the time frame. Meaning, if it's not in that time frame, no trade. Example, for me, I trade a 4-hour chart for direction. Now, if the 4-hour chart direction is not clear to me at that time, no trade. Simple. If it's looking both bullish and bearish at the same time, no trade. I mean, I need to see it clear. Then that's when I can move. Meaning, if my 4 hours is not clear, I will not even move to the 1 hour to look for where to trade from. Neither will I drop to the 5 minutes to confirm where I want to trade from. You see, so there are layers. If 4 hours cannot give me what I want, I'm leaving that pair ASAP. I trade 2 pairs, I check the other. I trade 2 pairs, I check the other one. Now, this is how you should assign one time frame for each duty. So the next step is structure the strategy. As you can see, one higher time frame for direction, one medium time frame to choose levels to trade from, one lower time frame for entry signal. Now, it's not right, or not even it's not right. There's no right or wrong way to trade, right? But it is more complicated if you have multiple higher time frames for direction. Weekly, daily, 4 hours, they are all higher time frames if you are a day trader or scalper. And most of you are watching me at day trader and scalper. Most retail traders do day trading. So a 4 hours is a higher time frame to you, a daily is a higher time frame to you, a weekly is even a monthly is a higher time frame to you. And guess what? There are people that analyze this 4. Now, when you analyze the 4, trust me, the chances of all of them aligning at what you want to see, all of them being bullish, for instance, is going to be extremely rare. Now, this is going to make you find trade scarce to trade if you're a disciplined person. But if you're those kind of guys that is dropping, okay, you know what happened in the weekly, you just draw lines in the weekly, then you drop to the daily, you draw lines, then you draw, like you're just drawing fancy lines, not like what the daily is telling you is influencing your decisions. You're just drawing these lines with hopes of dropping to 1 hour and 4 hours. Then where you actually base your analysis from ends up to be on the 1 hour, but you've drawn all these lines. It's a problem, because you might draw those lines and you're in a trade, and because the trade is not going in your direction, your mind start telling you that, hey, listen, your daily is bullish. You go to your daily, see, oh, it's like it's bullish. You jump out of the trade. Trades play out. Now, there's so many things to talk you out of your trade. There's so many analysis to do. And if you're those kind of guy that actually takes what those time frames tell them and factor it into their decision, then you have so many things to look at. And you just need one mistake in one time frame analysis. Like, let's say if your weekly is not correct based on your system, made a mistake or so, it can influence your trade, make you lose unnecessarily. So what happens is, if you're looking at too many higher time frames, you're making your strategy complex. So you need one to represent all higher time frame bias, and you look at that one. You don't look at anyone above it. Like for me, I use 4 hours. You can decide to use daily. You can decide to use anything that works for you based on the concepts, ideas you're trading. But I use 4 hours, and I don't go above that. Before, I used to, and I've learned from my lessons, and I'm bringing it to you. Everything I talk about in this channel is what I've learned from experience and how it has helped me. So if you really want to get your journey so easy, then you should listen to me. The next is one medium time frame to choose levels to trade from. Now, your higher time frame should be for direction. Your medium time frame, like the 1 hour, 30 minutes, even 15 minutes, they are medium time frames. This should be where you trade from. Now, if you're a supply and demand trader, is where you choose your supply and demand levels. if you're an ICT trader, where you choose fair value gaps, liquidity points, because right there you can see London high, London low, Asian high, Asian low, previous day high, previous day low, clearly on these time frames, other than when you're on the higher time frames. So if you're a person that trade liquidity, this should be where you should look for them. Now for lower time frame entry signal, now lower time frame entry signal is very delicate. If you're a day trader, even if you're a scalper, your lower time frame, the lowest time frame you go to for confirmation, you shouldn't look at it until price is in the level you want to trade from. So if let's say 1 hour is your medium time frame, you want to trade from a level like liquidity, for instance, and price takes out of liquidity. If you're someone that looks for confirmation on lower time frame, which I think I recommend for psychology's sake, because there are just going to be so many levels on these medium time frames, because they are not as higher time frames, that the levels are not so many. A medium time frame, there's so many POIs, so many levels to trade from, depending on how you trade. What can help you filter which is when you find confirmation when price gets into one. If not, if you're just trading them directly, you could have multiple losses in a streak, and then after those losses, price starts dropping from the one you choose to trade from, like from the one you would have chosen, but because you've used the wrong ones, you have exhausted your number of losses for the day. For those of you that have max losing for the day, which I recommend, but we'll come to that later, right? So you should not look at your lower time frame until you are in the right, or you are in a 1 hour level or a medium time frame level. Then you can now look at the lower time frame. And lower time frames, 5 minutes, 3 minutes, 1 minute, they're all lower time frame. Like me, I use 5 minutes. And then on that lower time frame entry signal, what depends on the concept you're trading. If that's where you want to look for your change of character or change in state of delivery for ICT people, or you want to look for candlestick confirmation for support and resistance people, that's where you do it. And you only go to that time frame when you are at the correct level on the higher time frame. Meaning when you're not at that level, you shouldn't be looking at the lower time frame, because it's chaotic and will rope you in. So the next is create a checklist. Now you've structured your strategy. You know what time frame is for this, what time frame is for that. You know what time of the day to trade, what pairs to trade, what to do. Now checklist. Now you're going to write them down. So create a strict but scanty steps you must follow before you place a trade. So strict but scanty steps. Now I'm going to show you my checklist so I can know what it looks like. So this is how my checklist look like. Now this is the checklist where I've marked out stuff, but now you see how many categories. You see 5 categories: 1, 2, 3, 4, 5, like 5 segments. So the first is 4 hour bias. Is it bullish or bearish? Now I know my criteria to know what is bullish or bearish on the charts, right? Now Q zone, I'm trading New York. This is, I always trade New York, so it's permanently here. Power 3, is it midnight open or 1:30 open? Okay, so where I get my POI to trade from, if I'm going to sell, I get my POI above midnight opening price. If I'm going to buy, I get my POI below midnight opening price. But there's an alternative I also use, which is 1:30 p.m., which is equivalent to 8:30 Eastern time. Those of you that know ICT trading will understand what I'm trying to say. Now entry, 1 hour POI plus 5 minutes choke. That's the criteria. And exit, stop loss below 1 hour zone and 2 hour TP. Now I see that it's a checklist, right? Now this is the PDF form I sent to my students. You can see right here, I sent to them. All of us do the same thing. You can see I trade here with my students, place all my trades, do everything. And we all use the same checklist. Imagine a situation where you're using the same checklist like your mentor. Like you've learned how he trades. You can trade exactly like him, but now you're in a community whereby while you're trading what you have been taught, your mentor is also showing you his trades, which is exactly identical as yours. Now you would hardly find communities like this, because it's either he's trading differently like you, he did not tell you exactly how he does it, or he does shady things, he's changing strategy every month, or one or two shady things that's going to make you wonder if you are just incapable or something is wrong with you. And all this discretional trading, and he does not have a checklist. Now this is the checklist. This is where you can probe me if I post a trade that is not in line with this. You know the trading strategy, you have the checklist copy, I have the copy, we are trading the same pairs, I'm posting my trades every single day in this damn community. Now that is what real apprenticeship is. So if you're watching this video and you want to be in this community, first of all, you can't just get in. You're going to first of all go through my training for 3 months, learn my strategy, how it works, everything. Now the last month, which is your 4th month, you're going to be in this community and trade with me. Now, after the 4 months, if you wish to still be in the community, yes, you could pay a subscription for that to always be to get that community feeling and to have the extra confidence that we are trading the same thing. But if you don't need that, that's not compulsory or mandatory, because at the end of the 4 months, you know exactly how to trade like me and do things exactly like me. So if you want to get into this community, you want to learn my strategy, you want to work with me one-on-one, you don't want to go through all the stress of creating your own strategy, and probably you're not ready for that, you want to do that with me, then you message me on Telegram. Now, how do you get my Telegram? On the description under this video. If you pause this video right now, go to the description, you will see the first link is my Telegram link. If you click on the link, you'll be right in my DM. All you have to send me is mentorship. I'm going to put you right in. So now you've seen my checklist. It is scanty and all my steps is there. Now, when you've created all these rules and structuring your strategy, it will be easy for you to create a checklist. For those people that their strategy cannot be put in a checklist, then there is a big problem. Very, very big problem. Your strategy is not viable. Now, the next step is forward test it. Forward test on demo for 2 months. Now, forward testing is literally following this checklist every single day for the next 2 months. Now, as you follow this checklist, the same time every day, the same pairs, you place the trade. What you're doing is you're strengthening your execution game. Now, in this 2 months, you face losing streaks, you face winning streaks. Now, I'm telling you, the losing streaks are okay. All you have to do is keep trading. Don't stop. Keep trading. Don't stop, because you are trying to see how the 2 months is going to end. You're going to see how your results are going to be. So it's very important. The next step is backtest it. Backtest your checklist during non-trading hours. So during the trading hours that you set for your strategy, which is, I would recommend 3 to 4 hours, either in London or New York session. During non-trading hours, when you're not on charts, you should be back testing, and you should do like a routine every day, 2 hours. Now, you should have the goal of getting up to like 500 trades and journaling them. Now, back testing is useless when you don't do it with a checklist. So when you're back testing and you don't have a checklist, you can easily stray away and start doing different ideas while you're back testing and trying out different things in your brain. For those people that are very curious like I am, it's going to be a problem. So you need to follow the checklist, because you're back testing to see the performance of your strategy over a large sample size. You're not trying to test ideas. So in that back test, you're going to lose a lot, you're going to win a lot. Now, this would help you calm your psychology down when losing in real life, because now you're seeing that your strategy can actually make you losses. It can actually make you wins to recover it. So there's no need panicking about losses while you're forward testing, because you now see it's normal. That's why backtesting is very important. Now, this is all for those of you that are trying to create a strategy with edge. Now, I'm going to move to the other guys that already have a strategy, but they don't know how to make it work. Listen, this is really, really, really important, right? So now let's go on to that. How do you transform a strategy to have an edge? Now, the first thing is look inward. Now, we're assuming you trade, you have a strategy, you have a strategy, you have your own approach, but you're still losing, you're in a net loss. Many people online will tell you it's a psychology, it's this and that, but your strategy could be the cause of those psychology issues that are reoccurring. Now, the first thing is look inward. Your strategy was framed based on your emotional insecurities. So if you formed the strategy without a mentor, you did it on your own, or maybe via multiple mentors, just do it on your own, or via YouTube, then there's a chance your strategy was formed with emotional securities, based on emotional securities. And what I mean is this: if you're somebody that always wants to be in a trade, you will form multiple entry models. If you're somebody that, like, for most people, they always want to be in a trade because it equates quantity of trades to money. So they think the more trades they have, the more they're most likely going to make money. So see, they're going to have too many entry models. They're going to have something like, if 4 hours is not clear, then I'll look for the same thing on 1 hour. If it's not clear, I'll look for the same thing on 15 minutes. If it's not clear, I'll look for the same thing on 5 minutes. Meaning they don't have each duty assigned to each time frame. And what problem is that? Is that whatever you're looking for on the 4 hours, if you go to the 1 hour and you don't see that you drop, as you keep dropping, you will definitely find that thing, because the lower you go in time frame, the more expanded the chart is. You see more activities, more things. So you will actually see something. And what that means is that you actually always have a trade every single time and round the fucking clock. And tell me how you would not fail doing this. So it's time to work on the strategy. Subtract and simplify is the next step. The only best way to tweak it is to subtract. Now, the only way to make your strategy worth it is to start subtracting. Now, I had a student, and this student met me that he trades SMC, that can I help him based on consistency and all that. He already has strategy. I was like, okay, cool. Only to work with this guy, and I realized that his strategy had too many problems. So many problems. Now, the thing is, with most people don't want to let go. They are so used to their particular way of doing things that it's really hard to let go. And I understand, because I've been there. It's one of the difficult things to do, to subtract from a strategy, because you have already interwoven the strategy in a way some things cannot do without some things. And I get that. But the truth is that this is holding you back. Most experienced traders over decades will tell you when they started trading, the way they trade then and now is not the same. Even the way they trade 5 years ago, even 3 years ago, is not even how they trade that time. I'm telling you, traders have been trading for 10 years and above. When they mean it's not how they trade that time, it's not like they changed their whole approach. It's that they kept making it simpler and simpler and simpler and simpler, because they're saying that there is no right or wrong way to trade, and losses will still come regardless of what you do. So why don't you do something easy and still have losses, like these guys doing overcomplicated and even causing more unnecessary losses for themselves? So, like I said before, your emotional securities of wanting to be in trades, not wanting to lose, can make your strategy shitty. So it's time to subtract and simplify. You subtract by removing the number of time frames you have. If you have more than 3 time frames in combination, it's too much. 1 time frame is cool, 2 time frame is cool, 3 is to be max. Anything above 3 is getting too much. Trust me, you don't need that. Most pro traders don't even do more than 2. So remove a lot. Trust me, those things you're thinking you cannot do without, your strategy will still win and lose the same way when with or without them. It's not going to change shit. In fact, it's going to, this reason you're simplifying is not to make your strategy perform better, but it's to make you perform better with it. Because the lesser the strategy, the lesser complication, the clearer your head. So you're going to subtract the number of pairs you're trading. If you're trading too many pairs, you're going to subtract the number of times you come to the charts. Okay, we'll talk about that next. But subtraction should start with time frame, things you look for on the charts. If your entry model is more than 1, subtract. If your criteria for finding direction is more than 1, subtract. Subtract. Now the next is reduce chart time. 3 to 4 hours daily is enough. So if you look, you're one of those guys that look at the charts, London and New York and Asian round the clock, you need to stop. Or even if you trade only London, but you look at all through London session, you need to stop. You need 3 or 4 hours max of one session. This is because you want to have most of your time off the charts, and when you're off the charts, you are going to have lower number of frustrations, and you will expose yourself less to risk. Very important. Reduce your chart time. Now the next is create a checklist. Now I've talked about checklists in the previous session. When your strategy cannot be in a checklist, your strategy cannot work long term. Put your modified system into actionable steps. So make sure it's been set. As you can see my own, I'll open it up again. You see, make it few, make it scanty. Like I see, I have to choose just one from each segment. Choose one from each segment. That's all. Simple, repeatable. And when it's simple, because what makes you profitable is not a strategy. It's your ability to repeat one thing over again and again and over time. So if it's complex, you cannot repeat it to be 100% identical over time. What happens to you? You get frustrated. Now the next is start journaling. Track every trade with Notion. Now if you're somebody that has been journaling with a book, it's trash. One of the most important elements in your journal is your screenshots, because you need to review your trades, and the screenshot is very important. Now you cannot put a screenshot in a book. So if you have been journaling with a book, it's time to stop. Notion is a digital journal. Always use Notion. This video up here is going to show you how I specifically journal on Notion. Watch it and learn. Now when you journal on Notion, you're able to track every single trade, every single lesson you've learned from your trade, from your week of trading, from your month of trading. Very important. Now the next is review your trades. Now reviews are your feedback. It shows all your real life executions are flawless or not. It shows if your real life executions are flawless or not. So there is one thing to have a working strategy. There's one thing to have backtested it and know what to expect, how good it is. Another thing to also journal your trades. But if you don't do this last step, everything else is useless. Reviewing. If you have been journaling but you have never reviewed it, then your journaling is useless, because the reason you're journaling is to review, to get feedback. If you have been trading, in your mind you're following your checklist, you're doing everything right. If you don't review them, trust me, you would never know the feedback. Reviewing is so important that you might have a bad month. To you, it's a bad month, it's a terrible month, the month was bad, the market was this, you start blaming it on the market. But I bet you, if you go back and review what you did that month, you find out where you would have done better. Not where you would have avoided the losses your strategy brings, no, but where you would have executed your strategy more flawlessly, that would have made that trade a winner or a break even, or maybe you would have not even taken the trade if you followed everything flawlessly. So what's my point? Review your trades at the end of the day, at the end of the week, and at the end of the month, also at the end of the quarter. Always back test it, like with replay, retrade it again, and keep notes on how you have performed. This is the only way you can really work on your strategy. For those of you that already have a strategy, I have to be honest, I'm not willing to work with stubborn individuals. That's it. If you know you're not ready to learn, you're not ready to let go, don't even DM me. Don't send me a DM. I don't care. But if you're really ready to like change your strategy, simplify it, make it easier for your own self, then you can message me. And as long as you're not going to resist learning, you're going to submit and do what I ask you to do. Now hold your hand. Then trading is going to be very easy for you, because see, it's not difficult. It's literally your mindset. You think there's a right or wrong way to trade. There's a right way to predict the market. All those thoughts is what's making you fight yourself. Coming into agreement that it's unpredictable and you just need a simple approach, repeatable. That's all you have to. That's all you actually have. Now I'm going to see you guys in the next video. Do well to like this video and subscribe. And as usual, I'll see you in the next video. Peace.